first thing you do is you take all your money and you put it into someone else's bank, right? Why would you do that? So that what's the first thing that you do is you should take all the money and flow it through the Bank of America and put it into the bank of you. That's what everyone in this office should be doing with their money. Now, if that's the case, if this is the case and expanding all your income, right? Let's say that people are making $10,000 a month, right? If you're overfunding it and maxing it out, what would your base policy be with America specifically? Yeah, $2,500. Why?
That would be close.
Right. So, what am I gonna draw? Here's you. Here's your policy. This is how you explain all of this to people. So, if you're making $10,000 a month, you want to have a $2,500 base premium. That way, you're maxing out your policy. They allow you to do 4 times more. And this money, this $7,500, 89% of it is available for you to borrow against, which is whatever 7,500 times 0.89 is 6675. Now, as long as your expenses are less than this, it works. If they're not, you have what kind of problem? An income and expense problem. You have a profit margin problem. You need to increase your income and somehow cut your expenses. And you spend one moment, one afternoon, one night with your spouse, looking at your expenses. You cut everything you can, and then you never look at it again. And then you focus on increasing your income. So then you got to teach people how to increase their income. So how do you increase your income? 2 ways. You can either sell or increase your price. I mean, this is very, very simple, but as doing what we do, you have to know this. So you have to teach people that if you're making $10,000, $10,000 is going to go into the policy. A portion of it, $2,500, goes to your base premium. $7,500 is going to go to your cash value. And you're going to be able to leverage $66.75 of it from the life insurance company so that you can use it for your expenses. And I choose to put my expenses on a 0% interest business credit card so I can buy back my most valuable commodity, which is time. Now, if you don't believe in what we do, what will you not do? This. Now, if you're talking to someone, let's just hypothetically speak about this for a second. You're talking to someone that has $10,000 a month of income, and they have $6,000 a month of expenses. 10K minus 6K is what? Right? And the old way of doing things, we would say, okay, you have $4,000 left over. What are you doing with it? And they'd say, well, I'm putting $1,000 into the S&P. I'm putting $1,000 in Bitcoin, and I have $1,000 that I don't know where it's going, and I have another $1,000 that I'm putting in savings. And then the old way of doing things would say, cool, out of these $1,000, how much do you feel comfortable putting into a policy? And they'd be like, I could probably do $250. And then you would sell a policy on $250 a month. Now, this way of doing things, are we doing something new? We're just doing what we're doing more and better.
Right.
And so now you hear this person, the old way of doing things, we sell a what kind of policy? $2,500 or $250 a month. This way of doing things, we sell a $2,500 a month policy, which is a 10x return. Plus, you make money on what? On the overfunded part too, residually, every month. forever. Right? So when you get you'll see when you put PUAs on, you'll get like 76 cents in commission, and then you get like $1.24. It's because of paid up editions. So if you have more paid up editions, if you teach them to overfund it more, you make money every single time they do that. So what's 7,500 times 0.025? 7,500 times 0.025 is 187.5. So every single month, you're making $187.50. What's that times 12, Mateo? $2,200 a year of additional income per client that makes 10K if you teach them to put to expand the system to include all their income. And if you sell one client a week, what's 2,200 times 50? It's gonna be 110,000. So you just made another $110,000 in a year just off of paid up editions. Just teach them to actually use their policy correctly, like Nelson talks about in the book. But this isn't what we teach, and this isn't how people do it. Why? Why are some reasons why you wouldn't do it this way?
You're not doing it yourself.
Because you're not doing it yourself. That is definitely the primary reason. What else?
So used to the old way was going.
Cool, you're used to the old way. What else? So you have a scarcity mindset, so they have a scarcity mindset. What else? Believe in it as much. We don't understand it fully. And so I'm doing my best to communicate the concept in the easiest way possible, right? So what really we all should be doing, so that we can teach our clients to do it, is take your income, put it into the policy, borrow against this. Now, if you're 20 years old and you have a $2,500 base premium, okay, this is another what? Another bait. $2,500 a month base. I have a $1,000 a month base. I'm 28, or I was 29 when I got the policy. It was $1 million. So hypothetically speaking, you'll probably create a $3 million whole life death benefit on that if you're an agent in here. Which means that if you walked outside right now and got hit by a bus, your family gets $3 million. How would your family benefit from an extra $3 million? Would it change their life? I know my dad would probably get a condo in Miami and accept whatever his drop in business is and not work at Lee's Hoagie House anymore after 42 years. I know my sister would probably keep doing what she's doing and go shopping and buy a bunch of Coach bags or Louis bags. I know my mom would be grateful. She'd probably quit her job if they all just got $1 million. How would that change your life? That's one way of looking at it. The other way of looking at it is what happens as you do this. What's $7,500 times 12 times 10? So what's 7,500 times 120? $900,000. That would give you $900,000 without any compounding of dividends of cash value in your policy 10 years from now. If you do this, and if you're making $5,000 a month, cut it all in half. You're making $20,000 a month, double everything. And if you don't know what you're making every month, do more, better. If you're not making consistent income, you gotta look in the mirror and wonder why. What are you not doing well? So when I talk about consistent income, there's high and low months that we have, but I always know I'll never make less than this. When I say never, I mean I believe it, because over the last 6 months, this is the lowest I had, right? So you will look at the trend in the past and do that. This is the process, this is the concept, and I want you to learn this. It'll make you 10 times more money by doing it this way. This is the infinite banking concept.